Inflation has come in hot pretty much for the better part of this year. Because of that, it is causing the Federal Reserve to rethink their plans to cut rates. Inflation will get the CPI on the 15th of the month, so about a week from now. If that comes out hot, again, above expectations, that's the key, it really could set in motion some bearish sentiment in gold. Continued end of year, I easily think gold, depending on the situation I mentioned, could breach the all-time record highs if things kind of calm down. It's really dependent on that and inflation. And
Gary Wagner, the editor of thegoldforecast.com, emphasizes a notable dichotomy between gold and silver in the short term. Silver's greater resilience is attributed to its industrial usage and market dynamics. The uncertainty surrounding Federal Reserve policy, particularly regarding potential rate cuts, contributes to this divergence. In the short term, gold traded with a mild positive bias on Wednesday, buoyed by a weaker US dollar. Factors such as rising gold demand from robust over-the-counter market investments, consistent central bank purchases, and safe haven flows amid geopolitical risks in the Middle East act as tailwinds for gold and dollar. However, the possibility of hotter-than-estimated inflation data could prompt a more aggressive stance from the Federal Reserve, boosting the greenback and exerting selling pressure on USD-denominated gold. Furthermore, hawkish remarks from Federal Reserve officials, including Chairman Jerome Powell's suggestion to maintain higher interest rates for a prolonged period, may weigh on the yellow metal soon. Looking ahead, Wagner identifies several key variables for the long term, including geopolitical tensions in regions like Israel and Ukraine and inflationary pressures. Depending on how these factors unfold, gold could potentially breach all-time record highs by the end of the year, although much hinges on the evolving economic and geopolitical landscape. In 2024, gold prices soared, achieving new monthly highs and outperforming the stock market significantly in the commodity markets. Despite a slight retreat at the beginning of the week, gold's resilience has been notable, particularly since the release of weaker-than-expected April non-farm payrolls data. Additional support for the metal came from a weakening US dollar following the latest jobless claims data, signaling a cooling US labor market and reinforcing expectations of potential rate cuts by the Federal Reserve around September. Join us as we delve into Gary Wagner's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Outlook for 2024 year-end in gold. And I think we're right now, if we're looking short term, we've had gold under pressure and silver moving somewhat higher. I'm a little bit more bullish short term on silver than gold. With the last FOMC meeting, I don't think traders have digested the fact that they actually were accommodative by reducing the balance sheet reduction. They were taking, I think, 95 billion off a month. They reduced it by 30, and that's 30 billion more per month that stays in the monetary system.
Wow.
And it's the first accommodative move they've met. Powell was a little accommodative, but of course you had one member yesterday come out, and he's a real hawk, but he's not a voting member, by the way. And he said that it's not restrictive enough. Susan Collins came out today and said that their current monetary policy is good. So you're getting mixed messages from the Fed, which is not unusual because you've got doves and hawks. But market participants are having a tough time with it because all of us are unclear as to how many rate cuts will come out of this year by the Federal Reserve. It was 3, now people are under the assumption that it's 1 or 2 cuts of 0.25%. And so without clarity in that, it's really set in motion a dichotomy between gold and silver. Gold moved down consistently, but silver actually find a base at about, this is the July futures at about 26.33 and move up off of that. It's sitting above 27.50 right now. And gold gave up about $7 in trading today.
Right.
And it's about at the same place in Australia. So you've got a real dichotomy this week. And I think it's that gold is much more sensitive to what the Federal Reserve does, where the industrial usage of silver has really kind of kicked in. And you do have the US equities moving higher. They were lower today, but they've been higher for the for the better part of this week and last week. And so you're seeing silver kind of find a base and move up, gold continuing to trade lower. That's my short-term estimate. There's so many variables in long term.
Yeah.
What's going to happen in Israel? Are they actually going to do a campaign? And it's a very dangerous one that the United States is against. In fact, they stopped sending missiles and other military equipment to Israel because they don't want them to proceed. But if they do, we don't know what's going to come out of that. We do not know what's going to come out of the Russian-Ukraine conflict. The second one is inflation.
Yeah.
Inflation is coming hot pretty much for the better part of this year. And because of that, it is causing the Federal Reserve to rethink their plans to cut rates. If inflation will get the CPI on the 15th of the month, so about a week from now. And if that comes out hot, again, above expectations, that's the key, it really could set in motion some bearish sentiment in gold, continued, and maybe bearish sentiment in silver, depending on what the stock market does and the industrial complex that utilizes silver. End of year, I easily think gold, depending on the situation I mentioned, could breach the all-time record highs. But if things kind of calm down, it's really dependent on that and inflation. And since I don't know what the future's going to bring.
Wagner notes that despite a recent sell-off followed by a rebound, silver has shown resilience, particularly with the retracement from the previous rally. This indicates potential short-term bullishness if it maintains support levels and continues trading above key price points. On Monday, silver's price rose by 0.28%, attributed to declining yields in U.S. Treasuries and a softer U.S. dollar. With anticipation building for releasing the Consumer Price Index on May 15th, investors are also awaiting Fed Chair Jerome Powell's speech on Tuesday. Regarding gold, Wagner underscores the significance of central banks' aggressive gold buying, signaling a loss of confidence in fiat currencies. This trend reflects broader concerns about currency devaluation due to excessive money printing and rising debt levels. During the pandemic, the U.S. Federal Reserve released about $3 trillion, rapidly expanding its balance sheet from $4.16 trillion to $9 trillion by April 2022, through initiatives like the Inflation Reduction Act, essentially providing COVID-19 stimulus by printing money. Let's get back to the interview.
What I see is that we had a recent sell-off. Silver at the beginning, first week of April, challenged $30 on an intraday basis, not on a closing basis. On a closing basis, just above 29.25.
Right.
Then it sold off hard. And the interesting thing is, when silver sells off, it sells off violently. We had a 5% drawdown, sideways trading action. Then we had a 3% drawdown that was late last week. And from there, it had lows that came in at around 26.33 cents, $26.33, and it's moved higher back above 27.50. And that's why I'm bullish short term on silver, because it did find support and it comes in at a 50% retracement. The retracement is from February, when silver was trading at approximately $22.50 up to about $30. So that's the fib retracement, and it has sold off about half of that move up, which was a really strong rally, moving from 22.5 to challenge $30. And then when it retraced or corrected, it gave back about 50% of those gains. And that's a very acceptable correction, and it's trading off that. Of course, any of these reports could change that, but for right now, I am more bullish on silver short term than gold. I think central banks have been aggressively buying gold for well over a year, according to the World Gold Council, in record amounts. I look at it this way. If you're holding large holdings of US dollar, euros, or other currencies, the only thing that it can do is, in terms of its buying power, not the dollar index as it relates to other currencies, but how much that dollar buys, how much of those wages are able to fulfill the bill obligation of a consumer is going down. In the same way, if you're sitting with billions or trillions, in the case of the central banks, US dollars, they're becoming less valuable. Literally, they can't go up. They
Yeah.
can only go down. So by taking those dollars and moving them into gold, they're in essence stopping the bleeding on that part of their assets. It's definitely a signal that the central banks realized that the currencies are on a race to zero, let's say. They
Hmm.
continue to print money. In the case of the United States, we've got $30 trillion in debt, and that is part and parcel from that money in the money supply and the fact that the dollar buys less now because they printed more of them than the Treasury could actually accommodate.
Right.
China has really been aggressive. They've been first and foremost in terms of the amount of gold. I think they reported they bought an additional 60 tons last month. They continue to buy aggressively. The United States has the largest holdings still, but you've got India and China and Poland. Those are the three top countries buying gold, but they've all been liquidating paper money for gold, just as your subscribers have been doing. They've been liquidating their dollars for silver. They're doing something that's no different than what the silver stackers are doing or
Right.
investors accumulating and adding to their portfolio of not hard currency, but hard assets in the terms of gold or silver. It doesn't surprise me because these people they understand what's happening
Right.
with fiat currency, probably better than we do. And so by moving assets from paper currency to gold is an exceedingly smart move because it stops the bleeding on the amount of dollars or yens or euros or Chinese yuan that they have in their central bank assets
Right.
into something that should hold value rather than decline. And currencies because they're fiat and because countries keep printing presses busy, let's just say, they keep printing more money, there is no chance that those currencies will buy more in the future than less.
With silver demonstrating resilience and gold facing various economic and geopolitical factors, including central bank actions and inflationary pressures, the path forward remains uncertain yet intriguing. And with gold potentially breaching record highs by year-end, what strategies might investors employ to navigate these volatile markets effectively? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.